Good morning, everybody. Good afternoon, and welcome to our webinar. Thank you for joining us today. Today, we are going to discuss the Main Street Lending Program and how it can help you. We are not going to discuss PPP and EIDL. We're going to focus on Main Street, although certainly at the end in the Q&A, I'll be happy to take questions about PPP and EIDL. Please post your questions in the Q&A only. The moderator will not have time to look between chat and Q&A. The recording of this webinar and slides will be posted shortly on our community site at realtime.inc.com. And later in the day, we will also be emailing a copy to participants. A little bit about myself. I'm the founder and CEO of MultiFunding. I write a regular column on inc.com on business lending issues. I've advised former administrations about the federal funding markets. I have a book out called The Growth Dilemma, and for my EO friends out there, I'm a proud EO board member of Philadelphia. Some disclaimers that the lawyers may cite. We are in an unprecedented time in history, and the information available to us is changing rapidly. Please refer to our most current presentation for education. The information provided is based upon our best judgment about what we know at this time. However, key questions remain about how to implement this program. MultiFunding LLC does not accept any liability as it relates to the timeliness or content of the information we are sharing today or may share in the future, and we are under no legal duty to update any such information or recommendations. We encourage you to check in with your attorneys, CPAs, and financial advisors for additional insights. Today, understandably, entrepreneurs and business owners are focused on survival. It is quite a frightening time, and we all generally seem to retreat during times like this. There's a certain herd mentality, and everyone is following the current story, and the current story is PPP and how to maximize forgiveness. People are also understandably, legitimately fearful and scared. With all that being said, we also need to start thinking about what is next, and if we want to stay in business, what we're going to do and how we're going to go about it. Invariably, crisis brings opportunity, and there will be many doors to open as we think about how to reinvent our business and tool ourselves to how to do that. And I hope in today's call, we can move away from the PPP and maximizing the forgiveness and thinking about these tools that the Federal Reserve is creating to allow us to reconstruct our balance sheets to live to fight another day. The Main Street program is deep down in the CARES Act, $600 billion in loans. There are two different lending facilities. One is for new loans and one is for expanded loans. Businesses can obtain financing only from one of the two facilities. To be qualified, you have to, if you have more than 10,000 employees or 2.5 billion in 2019 revenues, you are not qualified. So I'm going to hope that everyone on this call is qualified. And small businesses, including those that participate in the PPP, are also able to seek loans from the Main Street program. The minimum loan size is $1 million. To participate, you had to have had strong EBITDA in 2019. And this program is still open for comments. Final details could and will change. I want to share with you the new loan facility, the expanded loan facility, share with you some comparative examples and how MultiFunding can help. The new loan facility is for loans between $1 and $25 million. Eligible lenders are U.S. insured depository institutions, bank holding companies, or savings and loan holding companies. Your business must be created with all or substantial operations in the United States. These loans are unsecured and have a 4-year maturity. The amortization of principal and interest is deferred for 1 year, and they are based on an adjustable rate of SOFR plus 250 to 400 basis points. The minimum loan size is $1 million. I'll explain to you how you calculate your maximum loan size in a minute. It's better visually than with words. Prepayment is permitted without penalty, and there's an origination fee of 1%. So let's take an example of a company, to use the first row, that had $500,000 of EBITDA in 2019. Maximum they could get would be not to exceed $2 million, and their existing debt is $500,000. So you take the $2 million, you subtract $500,000, you get a potential new money loan of $1.5 million. To take the fourth row, this one has the same EBITDA, but has existing debt of $2 million. So 2 million minus 2 million is nothing, and they're not eligible to participate in the program. They already, under this scenario, have too much debt. Take another example. Let's use row 2. This is a company of $1 million with EBITDA. The maximum they could get is $4 million, and their existing debt is $2 million. Their potential new money, in this case, is $2 million. On a very baseline scenario, a company with $250,000 of EBITDA and $0 debt could borrow $1 million. What are the required attestations of this loan? That you will refrain from using the proceeds of the loan to repay other loan balances. That you will refrain from paying other debt of equal or lower priority, except for mandatory principal payments, unless you have repaid the Main Street loan in full. And you will not seek to cancel or reduce any of your outstanding lines of credit with your MSLP lender or any other lender. You attest that you require the financing due to the exigent circumstances presented by COVID-19. Using the proceeds of the loan, you will make reasonable efforts to maintain your payroll and retain your employees during the term of the loan. You attest that you meet the EBITDA leverage condition and that you will follow compensation, stock repurchase, and capital distribution restrictions that I will explain next. Essentially, you agree not to pay dividends or make any other capital distributions with respect to the common stock of your business for the time you have the loan plus 1 year thereafter. And for those who earn between $425,000 and $3 million in 2019, you agree to cap that as your compensation for the 3 years while you have the loan plus 1 year thereafter. And for those who earn more than $3 million, you take, say if you earn $6 million, you take half of 3 to 6, which is 1.5, and your total salary would be $4.5 million. Now let's go into the expanded loan facility, and these are for loans between $1 and $150 million. Let me visually explain to you how these loans are calculated. It's easier to understand. And these loans are tagged along to your existing collateral of your existing senior loan. So let's take for the fourth row a column with $2 million of EBITDA, and not to, that's where you go multiply that times 6 to get a not to exceed of $12 million. However, the company has existing debt of $8 million. 30% of that is $2.4 million. In a second example, the row 1 here, a company with $4 million of EBITDA and $4 million worth of existing debt. The maximum they could borrow is $1.2 million. How do you pick which program is best for you? Well, let's take example number 2. This is a company of $2 million of EBITDA and $4 million worth of existing debt. Their new facility that they would be eligible for would be $4 million, and their expanded facility would be 1.2. How do you think about all this? Financing strategy is offense and defense, planning for opportunities ahead and also being protective. And that's certainly what lies ahead for us. There will be opportunities to grow and expand our businesses in unexpected ways, and also catch up to do with unexpected working capital requirements due to the COVID-19 crisis. Let's take a couple examples. One company is with a $3 million line of credit and $1 million drawn. The line of credit has a personal guarantee, planning on getting an MSLP for liquidity. They would rather not personally guarantee the capital required to reestablish their business over the next couple of years. Another example is a professional services firm whose partners will reduce draws by at least 50% in 2020 to recover from COVID-19. They plan to take an MSLP to spread their income hit over 4 years instead of 1. Example number 3 is a company that has already been approached by several competitors who plan to close shop. They plan to acquire companies at pennies on the dollar and use MSLP money to help. To give you some math, every $1 million of MSLP money will incur interest and fees of $155,000 if you keep it for the 4 years, and the rate is 4%. If the rate is 2.5%, the amount will be just shy of $100,000. MultiFunding is certainly here to help you with these loans if you want our help. But really what we want to do now is open up the floor and take any questions. Please post your questions in the Q&A so that the moderator will be able to take them. Thank you so much.
Thank you, Ami. Are repayments under the MSLP program deferred for 1 year and then repaid over 4 years, resulting in a total of 5? Can you please clarify?
No, they're deferred for 1 year and then repaid over 3.
Confirming this is an unsecured loan?
Correct. No personal guarantee. There might be some lien against company assets, but no personal guarantee.
Can you qualify for MSLP if your business has negative EBITDA?
No. Depends. If your business had negative EBITDA in 2019, you cannot qualify.
Does the facility act like a line of credit that can be drawn in stages?
No, you take it all. It's like a term loan.
We're asking for clarification to review the fees again. Are those different from the origination fees?
The fee is a 1% origination fee, and then the interest rate is 2.5% to 4%, depending on how the bank evaluates your credit risk, plus SOFI, which is the cost that the bank borrows money from the Federal Reserve for.
So the new loan program is 4 times and the existing is 6 times?
4 times. For the new, it's 4 times EBITDA minus your existing debt. For the existing, it's 6 times EBITDA with a cap of 30% of your existing debt.
What is the rate? Benjamin is asking.
It'll be based how the program is described now, between 2.5% and 4%. And that will be evaluated based on your credit risk.
Can you explain the limits on distributions to owners during your loan period?
A little bit of it will be subject to further guidance, but let's say you took out $500,000 from your business in 2019. You won't be able to take more than that out for the time you have the loan plus 1 year thereafter.
If you are sole owner and there are restrictions on owner disbursements while you have the loan, are there restrictions?
I believe they are, again, based upon what you took out in 2019. You will not be able to exceed that. For the while you have the loan plus 1 year after. Now you can prepay at any time, but for while you have the loan.
When will these be rolled out?
We're hopeful and awaiting further guidance any day, and we're hopeful that the banks will open up for these in mid-May and money will start hitting the street in June.
Does the distribution apply to S-Corps?
We think that as long as you took it out in 2019, you don't exceed that in an S-Corp, you should be okay.
If your 2019 EBITDA was $400K and the total of our undrawn line of credit, PPP, available credit lines is more than $600K, it brings a max loan to $1 million. Can we close credit card to have less undrawn debt to qualify?
It's a maybe. I'm not sure how they'll think about credit cards. I don't think they considered credit cards when they were thinking about this program, because usually it's at least intended for companies that are bigger than that and wouldn't consider that.
How about LLC with 50% foreign ownership?
Should not be an issue as long as the primary operations are in the U.S.
I'm looking for a $1 million loan. Does that MSLP program represent a better opportunity or interest rate wise than a standard SBA loan?
Well, one question is if you can get a standard SBA loan in this environment, that would have to be looked at. So maybe it does provide a better opportunity in terms of interest rate, but not in terms of cash flow, because standard SBA loans amortize over 10 years, so your monthly payment's going to be a lot lower. A standard SBA loan would require a personal guarantee, and the MSLP would not. So you'd have to evaluate the trade-offs and figure out what's better for you.
Since this is based on EBITDA, nonprofits are not eligible for this program?
as of right now, I know nonprofits are lobbying to be eligible for it, but I haven't heard anything.
Where on the website do we find past meetings and videos and copies of the presented material?
If you go to realtime.inc.com, we'll be posting this material on top of the website, within the next hour or so.
There's a question in the chat regarding MSLP for the formula for finding out your EBITDA.
I can look at it if you like. Yeah. EBITDA, you should really ask your accountant for clarification, but it is earning before interest, tax, appreciation, and amortization. See a question, are we still helping people with a new round of PPP? We have not. If you haven't applied for a PPP yet, you can certainly try. Our advice would be to look for a smaller community bank in your neighborhood or your community who's taking them.
Another few questions of PPP since the MSLP have cleared from the chat box. I have read the SBA was supposed to release final PPP forgiveness rules on 4/26, but haven't been able to find any guidance. The FAQs haven't had any new forgiveness details. Any insight?
Nope, we're just waiting.
PPP question, payroll periods don't usually match up nicely to the 8-week loan. How to deal with that?
It's unclear and we'll have to wait for guidance. I think it'll be on a cash basis, not on an accrual basis.
MSLP question, our EBITDA was 378 million and we have a line of credit for 1 million. Can we apply for the expanded loan?
I'm going to guess it was 378,000, and unfortunately, with a line of credit of 1 million, you are with that EBITDA, you are too small for to apply for the loan.
Yeah, there's many questions around PPP forgiveness updates. If we were in the first queue for the first round of PPP, would we be on the top of the list for the second round of PPP? Thoughts?
That's random luck. I don't know. Depends on your bank and how they're doing it.
I obtained a PPP of 100K and the EIDL 400K could give me more. If I obtain the money from the EIDL, which is the 400, do I have to subtract the 100 from the PPP for the MSLP?
Any debt that you incur, whether it's PPP or EIDL, you have to calculate in your MSLP calculations to determine if you're eligible.
What is the difference between the MSLP and the expanded facility?
The MSLP is either a new or an expanded, and you just have to figure out which one is best for you. They're both the new or the expanded are part of the MSLP.
Any clarification on when the MSLP, the application will be available, or insight that we need when it will be open?
I'm not sure it's going to be available on one particular date, like in the same way with one similar application as the PPP. This is going to have a different dynamic, and I think there'll be maybe 200-300 banks around the country participating in this, not 5,000. It's just going to have a completely different dynamic. We're hopeful that we are busy preparing clients to get ready to submit, but we don't think that it'll be likely mid-May before applications are really open.
Do we have a list of MSLP banks available?
Not yet. Not yet. We're in discussions with many that are interested in it, and we're helping our clients through that, but there's no public list yet.
We have a comment about the lectures on realtime.inc that does not work. I can email a copy of this, and we'll also look on the community site to see that that does work. Thank you. Ami, it looks like we've answered all questions.
Awesome. That's going to wrap it up unless anyone else has any other questions. We'll be back on Thursday to do this again at noon Eastern time. And we are continuously awaiting more guidance on the program. And when it comes up, we will be updating it. And we certainly look forward to working with people. We hope everybody is staying safe and well, and we wish you God bless. Thank you so much. Take care now. Bye-bye.
Thank you, Ami.